Hi everyone, this is Jacob with Coppercoin Financial, and today we're going to talk about C corporations. Similar to our LLC video, we're going to kind of go over who can form one and how taxes work, how you get paid, and things like that. So to start off, so who can form one? That's basically anybody. It's all regulated on the state level, and so what happens is you and your incorporators, or just you, can have between 1 and 1,000 people or 1,000,000 people. Doesn't really matter. It's an unlimited number, really. But basically what you do is the very first time you form one, you and your other incorporators, is what you're called, the founders, get together and you have your very first meeting. So you have your incorporators, tours, right? And then you have your first meeting. And in that first meeting, you're going to elect your board of directors. And from there, you're going to elect a chairman. And then also the chairman will then direct the secretary. You're going to elect your officers after that. Now, officers are an important part. Most states have a mandatory minimum of 3 officers, or at least 3 titled officers. So you have a president, a secretary, and a treasurer. And the chairman will then direct either the secretary or treasurer or somebody to file with the state what's called the Articles of Incorporation. If I can spell right. And what these do, this just is basically so these Articles of Incorporation are kind of who's the original incorporators, who the original people are. On here as well, it'll list like where your primary address of business is, the day you're going to start business. It'll also list the number of shares you're authorizing and what type of shares, whether they're common or preferred or things like that. And just kind of contact information, who the principal agent is, who needs to be contacted by, if the state needs to contact the company, who they do that, who's the main contact, and what's that main contact info. And then part of this first meeting is the first meeting then authorizes the officers to direct business, to get your company off the ground and going, to basically allow you to start running your business, whatever that means. Authorizing expenses and reimbursements for any kind of fees, because there is a fee with your Articles of Incorporation you're filing with the state. Again, that's going to be, when you file with the state, that's going to be either the Secretary of the state or Department of Commerce, or you'll have to look it up, but ask us and we'll help you out too. So it's a little more formal than the LLC, if you've ever seen that video. LLCs are very basic, but with C corporations, there's a lot more formalness to it, more paperwork. You got to keep track of and things like that. So once you've had your first meeting and the secretary has written down all the minutes, you're actually going to have all the incorporators and those attending sign that doc, say, yep, we were here. We talked about these things. So, and then once that's done, you're actually going to have, from then on out, you're going to have an annual shareholder meeting where you're going to come together and you're going to make sure the shareholders, again, are going to elect the board of directors, who's then going to elect the officers and the chairman. Chairman first, and that could be a re-election. If it's just you, you're going to be on the board of directors, you're going to be the chairman, and you're going to be all of the officers. And once a year, you're going to have a meeting to re-elect yourself to all of those positions again. So there's a little more, and you do need to keep records. You have to keep what's called minutes. These are just records of these meetings happening. And that's it. You're going to continually do that every year. It's an annual, not just, whenever you want to, but an annual meeting. So as part of filing with the state, the Articles of Incorporation, again, it's going to be probably linked up, usually if you do it online, with the secretary or with the IRS. So you get an EIN number, and the IRS will then mail you a letter telling you what forms to file and things like that, and when you need to. You're gonna file Form 1120 That's the corporate tax return. We'll get to that in a second. Part of this other first meeting, I almost forgot about this, is you're actually going to adopt some bylaws. Bylaws govern how the organization is run, from board of directors to shareholders to basically everything. It's the governing document it's an internal document that governs how the organization is run. Sometimes they can be really vague, sometimes they can be very specific. I don't know of anything that necessarily can't be in there, but there are a lot of recommendations of what should be in there. Who can be directors, who can be the chairman, things like that, or how long those positions are open. If it's going to be every 6 months, you're going to do a meeting. You don't have to do an annual. You could do a biannual or a monthly if you wanted to. But it'll also set up how often that all takes place, and who directs which meetings and things like that, which officers you're going to have. Most states have a requirement. They have a president, treasurer, and secretary as the officer titles, but you could have others. So that's basically starting a C corporation. A lot of kind of overhead administration kind of work, and then continually after that, you've got to redo a lot of this every year. Pretty easy. So why do people actually form corporations? And then that's where we're going to get into. So the good thing about C corporations in general are the limited liability. Again, it protects your personal assets or those of the shareholders and incorporators from the actual personal assets. So they have the business assets and liabilities, and you have your personal assets and liabilities. And as long as you are following good business practices, you keep those things separate as much as you possibly can. Then you're good to go. You don't intentionally break any laws or anything like that. As soon as you do that, everything's out the window. So another pro to C corporations is the ability to raise funds. So if you've got some software you're building, you've got to build a huge plant, or I don't know, you need a lot of money up front, and you don't have it personally, right? So another option is you can issue shares. Basically, you sell shares and you get money, and that's one of the great reasons why people like them. In fact, well, most I don't know of any, but I do know they do exist. But I don't know of any non-public C corporations. So all of the big name corporations that are traded out there on the stock markets are all type of C corporation, and you're actually buying and selling shares of that corporation, pieces and parts of it. They may have hundreds of millions of shares available to buy, and you buy one, and you're less than a % owner, but you're still the owner, and you still get to vote in the annual meeting and things like that. So, and that's pretty cool. That's also the really cool thing, is it's really easy to trade your shares, right? If you don't want to be an owner anymore, you can just sell it off to whoever's willing to buy it. Often in the bylaws, there'll be a clause that says you have to sell back to the corporation your shares. Also in that annual meeting, you'll set up kind of how much those shares are worth. You'll provide a value if you're not publicly traded. So that's another reason to do that, in case a shareholder wants to sell their shares. But those are kind of the big reasons. And so if you're looking to raise capital, you want limited liability, and your shareholders may be kind of fluid throughout the growth of your company, corporation's the way to go. So the next question is, if you form a corporation, you and your buddies, how do you get paid? Well, you have to go through payroll, which is good and bad. So how do you get paid? You got to go through payroll process, right? So that means part of this payroll process is you're going to have employment agreements, and you're going to have other employees potentially. Ignore the handwriting. Anyway, and so what that really does is that actually brings up a lot of questions about, well, how much do I get paid and things like that. The answer is it has to be a reasonable salary. Reasonable could mean all kinds of number of different things, so I'm not going to get really into the nitty-gritty of what that actually is. just know that it can get pretty convoluted and complicated. So, but part of that pay is when you do get paid, the company also has to pay taxes. So your pay is going to be subject. You're going to end up being get withheld at least 7.65% for federal, but then the corporation as well is also going to pay 7.65% in its payroll taxes. And then they'll also this is what's considered FICA. This is Social Security, Medicare, things like that. They're also going to end up paying FUTA, which is 0.06%. If you watch my video, I probably misspoke there, but that's what the rate is. Often this is offset by the state unemployment amount, so that could vary. But if there's no state, then usually it's that amount. So yeah, and then on top of that, these are the federal ones for your payroll. There's also the state counterparts to these. So there's the state taxes that also come out. Some states have additional, some just have an income tax you got to pay, and things like that. So make sure you're aware. Call us, ask us if you have any questions about that. And then finally, taxes. How does taxes work for a corporation? Well, they're not a pass-through tax like we've seen in the past with LLCs and sole proprietors. There's no pass-through. The corporate income tax rate as of 2018 was 21% for all of them. It used to be a graduated system where the range, was all the way up around 38 or 39.5% or somewhere way up here, and it would range all the way down based on your income. So with the major tax overhaul, that's all gone down, and corporations now just pay a flat 21%, which is kind of nice. Often a lot of people will look at that rate and compare that to their personal income tax rate, and if they're in a really high income earning bracket, they'll maybe form an LLC they'll form a C Corp instead of an LLC to help reduce some of their tax liability. Another way you can get paid from a corporation is through dividends. The C Corp itself does not get any kind of tax break for dividends, meaning that it's not an expense to the company, but it is income to the various shareholders. There's some little complexities around that, so it kind of depends on if it's treated as capital gains or not, depending on your basis in that in the stock and things like that, and when you got paid out and things like that. So, and capital gains for personal range anywhere from 0 to 15% or even more. So it really depends on your personal situation on those things. So it's kind of a little more complicated, C corporations are. So that's why a lot of people avoid them. Large corporations, a lot of companies will form those because of the benefits of the funding purposes. A lot of startups that want to grow their business and sell it off really quick or sell their product, grow really fast in a short amount of time, will do a C corporation, and that's just so they can easily get that funding out there. Once they're up and running, corporations take on many sizes, from one person as the sole shareholder, who's also the chairman, who's also the president, the secretary, and the treasurer, the CFO, the CEO, the whole gambit, to hundreds of thousands of people in a corporation. So some of those largest corporations and some of the largest companies in the world are corporations, whether public or privately held. So just keep that in mind. The income tax rate for C corporations is 21%, but they also end up paying another roughly 8% in payroll taxes to all their employees, including themselves as an employee. So anyway, if you have more questions, please let us know. Again, subscribe on YouTube and like and follow us on Facebook, coppercoinfinancial.com. Thanks, guys. Bye.